you're right. Nice to see you too. And yes, this is very good for the banks as well as the private equity community. Guidance to investors, I'm told by sources, is that this one will price toward the high end of the range, the top half of the range, which could make it the biggest IPO globally this year. Medline manufactures and distributes medical supply products, things like masks and gowns and lab kits. It was taken private by a consortium of private equity firms, including Blackstone, Carlyle, and Hellman and Friedman back in 2021, which was then the largest LBO post-financial crisis. At the high end of the range, the IPO range, Medline could be valued at $55 billion, which is more than $20 billion higher than the sponsors paid for it. As a result, it's seen as a key test, not just for the IPO market, which of course is ripe with a healthy backlog of 2026 potential deals, but also the private equity industry, which has struggled over the past few years to find exits for its portfolio companies. Now Medline is poised to be the largest IPO of a buyout in history, which makes it an important test for sponsor-backed assets that need to find exits. In fact, anxiety over exit challenges was listed as a top concern among 80% of investors who were recently surveyed by Preqin. And so any type of recovery and exit opportunities, those are IPOs or sales, is important for the restart of that fundraising flywheel. Global PE fundraising this year is expected to be flat to slightly lower than 2024 levels, and you can see well off the heydays of the 2020-2021 era.
These stocks have started acting better too.
Yes.
The private equity ones. Like
yes.
We had the tumult over the a couple of bankruptcies in the private loan market. Then all of a sudden you had a million questions about private credit again. And lo and behold, over the last month, these stocks have actually looked pretty good.
Yeah, and you can see the bifurcation of the specific alt firms that are more tilted toward private equity versus private credit. The TPGs of the world, the Carlyles of the world are in the green year to date, actually, and they've kind of been bolstered by this idea that the flywheel of fundraising engine could be turned back on. That bodes well for management fees, potential carry, especially if Medline is any indication of what a profitable kind of deal might look like in this environment.
Maybe we were a year early on the private equity trade in general. I mean, we came into the year, yes, I think, with pretty high expectations that you were going to have animal spirits and you're going to have exits and all the things that private equity has been pent up waiting to have happen, and it really didn't happen in any significant way.
No.
Maybe next year is the year.
Well, and you're also sitting on arguably $2 to $3 trillion worth of market capitalization when these 5 or 6 companies that are sitting on the sidelines, the SpaceX, the Databricks, Stripe, Anthropic, when they come to the marketplace, OpenAI, ByteDance, and they're being funded. I think it's Databricks that just did another round as well. So the private markets are serving them well. Ultimately, they are going to step into the public markets, and it's going to be an incredible force when they do, just because of the size that they're going to enter the markets with.
All right. LP, thanks as always. Leslie Picker up next.